Neeraj Dewan joins in with his perspective on the market. Neeraj, it's great to have you in the show. Thanks very much for taking out the time. Give us how you're viewing 2019. Give us your picture for 2019.
Yeah, good morning. I think as far as domestic cues are concerned, whether it's the interest rates, whether it's fuel prices, crude prices, correction we've seen on mid caps and small cap stocks in this 2018. I think domestic cues are quite favorable for a good 2019. I think there can be broader market participation going ahead in 2019. So there will be volatility because of global markets. Global markets, there can again be some problem which may come because of China-US trade war. There can be something to do with Brexit. So there'll be some slowdown fears in US, which some people start talking about in between. So I think those kind of volatilities will continue as far as the global markets are concerned. And domestically also we have an event. We have the election results, which will come 3, 4, 5, 6 months after in the new year. So those kind of volatilities will continue. But looking at the fundamentals purely economy wise, I think things are quite favorable for a broader market to do well in the next year. So I think I would say that this is a good time, and if volatilities happen in between, it would be a good time to keep on adding to your positions, because 1.5 years down the line, I think if you're investing now also, you can make a decent return from the stock market.
So where would your bias be in terms of your sector biases for the new year?
See, positive on capital goods stocks. I would be positive on PSU banks. Then I would be positive on stocks like automobile stocks, where we've seen some correction, some consumption slowdown which happened recently. But I think that's more or less a temporary phenomena, which it should tide over now. So these are kind of sectors which I would be looking at to invest in.
Okay, but do you think financials, after the rough year that they've had in 2018, would hold a chance in 2019?
Yeah, I think so, because see, you've seen when financials, if you take private banks, the consumption has taken some backseat in the short term, but I think domestic consumption is going to again come back, and you see a good consumption because interest rates have again coming down. So, and there's a possibility that interest rates will come down in the new year. So, and inflation being at these levels, so that is one possible impact which will have on the consumption. So private banks, which are more retail consumption focused, will continue doing well. And even PSU banks, you've seen the recovery is continuing. You've seen that the interest rates are now again low, and there's a push to infuse capital into the bank so that the lending momentum can pick up. So credit growth can happen even as far as the corporate facing banks are concerned. And even if you go down to NBFCs, NBFCs have seen a decent correction because of a liquidity crisis which happened recently, and we've seen the similar thing play out in 2013 also, when we had a liquidity crisis for NBFCs, and in a couple of months that was forgotten, and then we saw a good rally, good pickup in demand from NBFCs also. So NBFCs, because of the strategic positioning that they have, the kind of locations they're able to reach because of their specific locational advantages and specific penetration that they have, will continue to get that kind of capital. And I think the ones which are well positioned to be able to get capital, have a good parentage, will again come back and start lending in full momentum. If the kind of growth that we saw, about 35-40%, may not happen, but at least coming back to 20-25% is possible in the new year for some of the NBFCs. So I think across financials, I think there is a good possibility then they can continue and they can come back. The momentum will continue there.
What about the other team? In technology?
So the technology, I feel that the mid-cap IT space is where we saw a correction, and there is still a upside potential which will continue because they are more diversified, and for them to diversify is not so difficult as a large cap IT is. So I would stay with the mid-cap IT. I think there is definitely a case for a good return for mid-cap IT stocks.
Okay, and what's your outlook on pharma?
So pharma again, so we've seen time and again being disappointed with the pharma rally. They start picking up, then some problems happen. A very good example for that is Sun Pharma. We saw pickup in Sun Pharma, then investors again started feeling that the worst is over for a stock like Sun Pharma, and again we saw bad news hitting them and the stock correcting like this. So I think I would still stay with pharma very selectively if I get one or two, stocks which I can invest in, but otherwise as a sector I think I'm still going to stay away with pharma till we actually see 2-3 quarters of good performance coming on the numbers as such. So I think numbers are more important to see now.
What's your own expectation on earnings?
I think this quarter, as far as autos is concerned, whether it's NBFCs is concerned, so the expectation is muted because we know that this quarter 2 months were washed out because of the liquidity crisis. So autos also saw the numbers are in front of us. So those expectations are already built in. But I think when the earnings hit and actually the what you expected will come, there may be some volatility at that time in sectors, these sectors which I'm talking about, autos, NBFCs. But otherwise, when you speak to a lot of people, whether it's even commodities concerned, they say that first 2 months were bad, but the third, in December, they're seeing a pickup happening again. Even commodity prices, which had come down, are seeing some rebound there. So I think there'll be mixed set, but as far as capital goods is concerned, private banks is concerned, I think there the earning momentum should continue.
Okay, and how are you going to be looking at your portfolio strategy in the run up to the elections and then post that? So, next year is going to be really about what you do in the first half of the calendar year versus what you do in the second half. And maybe from a financial year perspective, first quarter versus 3/4 of the remaining FY20.
See, my view is that though we are long-term investors, so we pick up stocks which will go do well in the next 2-3 years, and if they're coming at a right valuation, we'll pick those stocks and put them in the portfolio, and if you get some volatility, maybe add more. But even if you take the short-term view, next 2-3 months, I think mid-cap, the broader market had seen a massive correction. So mid-cap stocks, some of the liquid mid-cap stocks there, I think there, if you have the valuation comfort, the stocks are available at very good valuation. I think even now, if you're picking up even the short term, I think there can be a broader market participation before the run up to the election. So I would even bet on those stocks. But then, when you're going close to the election, maybe another 2-3 months, then one needs to be cautious and wait for a couple of months to see which side the tide and what kind of a government comes, and then you have to make a fresh perspective of the rest of the year. So the short term also, I think there can be broader market correction in the broader market participation in the market. Okay,
can you talk stocks, Neeraj? Yeah, I'm sure today you can kind of cushion yourself with the regular riders and disclaimers and give our viewers something to look forward to into 2019 in terms of stock ideas.
Yeah, the stocks which I'm going to mention are the stocks which I'm invested in, and we have a research coverage in most of the stocks. See, among the large cap, like I mentioned, I'm positive on L&T in the capital goods infrastructure space. I'm positive on PSU banks like Canara Bank, Bank of Baroda. I think Bank of Baroda is not performing because of pending merger and the merger ratio, but I think the valuation deserves a look at Bank of Baroda at these levels. Then I'm even positive on something like a Bajaj Auto, where their strategy of increasing market share is picking up. So I think that, and plus new capacities coming in three-wheelers there, so that stock is one I'm positive on. Plus there can be some sort of push, whether it's the rural economy, which will contribute to the Bajaj Auto sales also. And among the mid-cap, like I mentioned earlier, also positive on stocks like SRF, because the chemical division, I think they are doing very well in the specialty chemicals. Then among stocks like Shoppers Stop, Venky's, I think consumption is something which domestic consumption will remain strong. And these stocks are available at very good valuation, like Shoppers Stop available at 1 time sales next year. Like Venky's for that matter will be available at 12, 13 times PE. So these stocks, I think valuation deserves that these stocks can get a better valuation from these levels. Shoppers Stop can easily trade at 1.5 times sales. Venky's can trade upwards of 15 times PE. So these stocks are something which I'm positive on. And even TCI, because TCI took some hit in the last quarter because of the fuel prices going up, and with crude prices coming down, I think that margin pressure will also ease on TCI, and the volumes anyway are doing well. So 15-20% top line growth we are seeing in that stock. So, and with margins improving because of crude coming down, that can also even the quarters ahead can do better for TCI also.
Okay, thanks for that, Neeraj. Thanks very much for joining us, and here's wishing you and your team a very happy and prosperous 2019.
Thank you very much.